He just became a Dogecoin millionaire using nothing but his stimulus checks. And you may be thinking, how is that possible? Before we get into today's episode, I wanted to let you guys know that I'm doing a $500 giveaway if we get this video to 2,000 likes, and I'll be announcing the winner in tomorrow's video. So all you need to do to be eligible is like the video, and make sure if you see it not at 2,000 likes yet, make sure to like it, and also leave a comment down below saying anything you want so then I could message you and let you know if you won. Also, in addition to this is a longer episode, so I'm going to be putting timestamps saying what topics I'm covering at each point in time during the video, so you don't have to watch the whole thing if you don't want to. If you only want to watch about stimulus, you could pick the timestamp for stimulus checks, skip ahead to that. If you only want to watch it about Dogecoin, you can skip ahead to that. Or if you want to watch the whole thing, you want to watch about the stock market, cryptocurrency, and stimulus checks, just sit back, watch the entire episode. But back to the program. I think you told me about this guy. Yeah, he put his $1,200 stimulus check, turned it into over $1 million with that one investment. Crazy. Yeah, we'll talk about that in a bit. But anyways, welcome back to my channel. Hope you're having a great day. Go live every single day at 9 a.m. Eastern time for my show. If you're new here, make sure to subscribe. We talk about financial news, the stock market, cryptocurrencies, and everything like that. So I don't know if you were the one who told me about this. Yeah, so SKILZ yesterday, the stock absolutely skyrocketed through the roof. It was up over 30% during the day, and right now I think there's still a lot more upside, and a little bit what we're seeing could even be like a short squeeze like we saw with Gamestop. Over the last couple of weeks, the last 2 months actually, SKILZ has received a couple different short sellers reports. It's received 3 in total. So the first one was a couple weeks back, and the first short seller report was from Wolfpack Research. They criticized SKILZ. They said basically that the company had too high of a valuation. They said the revenue projections were ridiculous. There was no way that they were going to be able to hit these numbers. And they said that the demand for esports was actually appeared to be declining already. So they did not like SKILZ at all. Since then, SKILZ has just tanked. It was at over $40 a share, went all the way down to like $12 a share right before we saw this little bit of a run. But now I think, there's a lot of upside, and we're seeing even a short squeeze like with GameStop. The second short seller report was from an account on Twitter. Just a week later, after that Wolfpack Research report, an account on Twitter named Restraint published a short report highlighting risks SKILZ faces as from the Google Play Store, other risks of relying on other platforms and being a mobile company. And then the third short seller report just came out this week. Just the last couple days was another Twitter account called Eagle Eye Research. It was just a brand new report, a brand new account that posted this report. And essentially, they said that SKILZ was misrepresenting revenues as well as its overall financial condition. They were basically lying to investors, and all of this has continued to drive the stock price down. But this has presented great buying opportunities all the way down to $12 a share. Now it's gone up pretty significantly, but I still think there is massive upside. I think it could easily reach where it was before we've seen this massive drop off towards that $40 per share range. So right now, 4 things I like about SKILZ, a couple different things. First of all, the potential for a new hit game. A lot of people who are bearish on the stock don't like how with SKILZ, it relies on a couple of different games to generate most of its revenue. So right now, approximately 80% of its revenue comes from its top 3 games, which are Blackout Bingo, Solitaire Cube, and 21 Blitz. A lot of people are like, well, if you're only relying on a couple of games, then what happens if those games aren't popular anymore? That's going to be a big struggle. However, that's just the nature of the platform. They've been this way for years. And if you could see from 2016 to 2020, the top 3 games have always been switching. They're never the same exact 3 games that are in the top. What happens is when they see a game does well, they start investing in that, advertising that, and investing in sales and marketing to get that game out to more people. So that's just the nature of the platform. People are continually to develop new games, and that's the one thing I like about SKILZ. There's always more games being developed for the platform, and if they're spending a lot of money to develop them, then when one hits, one does well, they spend money on sales and marketing to drive that up to the top of the rankings. Obviously, a couple of them seem to stay at the top for years and years, but they always seem to fade away. And Skillz has always consistently been able to develop new games and scale them successfully over time. So I'm not worried about that. But some people, that they could see that as a downside. I just see that as, they're consistently developing more and more games. They're going to always spend the money on the games that are doing well for sales and marketing. Next up is with geographic upside. Some people who are bearish on the company also talk about how most of the revenue comes from the US, and that's a smaller market. But this is actually an upside, in my opinion, because the international mobile gaming market is 4 times larger than North America, but it currently only represents 10% of Skillz' revenue. So right now, they're able to do about $300 million in revenue just from the US market, which is 4 times smaller than the global market. So I think as they continue to expand into India, expand overseas, that's going to mean more and more revenue for the company. And, if they just keep the same ratio that they have in the US, they could potentially 4x their revenue from where it is right now. They said they expect that India will increase their addressable market by 65% and projected to grow 4x faster than the United States. So they're saying that while the US is a much smaller market, they are expanding overseas, and overseas, this digital gaming market and mobile gaming market is growing even faster than in the US. And the last thing is with their numbers. A lot of people are saying their numbers right now don't justify the valuation. Their valuation is too high. But in reality, in 2020, they did much better than expected in terms of revenue. Their numbers were at $230 million for 2020 in revenue, which was $5 million above guidance. 2021, they reiterated a $366 million revenue guidance, but it wouldn't be surprising if they raised that even more, because in the first quarter, they had about $80 million in revenue already. So looks like they're on a very good track. My opinion, the company's continuing to grow very, very quickly. They went from $230 million in revenue 2020, projecting about a 50% increase to 2021. On top of this, they're starting to enter the international markets, which is much bigger than the US. And with the short sellers, once people start to see that there are a lot of short sellers attacking this stock, getting behind it, that could drive a similar frenzy that we saw with like GameStop, AMC, and like that. Now let's talk about MP Materials. So MP Materials has also been tanking lately. It reached all-time highs, come back pretty significantly from then. Now it's around that $29 per share range. At one point, it was as high as $50 per share, but just recently, analysts at Morgan Stanley, they came out and gave it an overweight rating, and they boosted the price target to $41 per share, implying about a 30 to 40% increase from where it's currently at. That's a $10, it's about 35% increase from where it's currently at. I am very bullish on MP Materials. I think it is a great stock to own, especially if you think that the electric vehicle industry is going to grow. If you believe there are going to be more electric vehicles in the future, which I think is inevitable. I think if you don't believe that, you should look at it again. But if you believe that there's going to be more electric vehicles and in the US, overseas, well then they're going to need to have these rare earth magnets. MP Materials is the largest North American company that mines these rare earth magnets. And on top of this, right now, they're sending their material to be processed in Asia because that's where a lot of this work is done. But within the next 12 to 18 months, they said, they're going to be able to process all the material here in the U.S. at their own facilities, separating them from being reliant on any company in Asia. They'll be solely, self-sufficient. They'll be able to do everything from mining, processing, to distributing, all from their own plants and factories, which is absolutely huge. Right now, the valuation of MP Materials is sitting right around that $4.95 billion range. And I see this having massive upside from where it's currently at, because with Joe Biden administration, they're looking to get net zero carbon emissions. They're looking to get more electric vehicles, more electric vehicle charging stations. The only way you can do that is if you have this rare earth magnet that's needed for every single electric motor out there. And that's why I see MP Materials being a massive winner. Maybe not in the next couple of months, because we've seen, a couple months doesn't mean anything in the stock market. It could fluctuate dramatically. But over the next 5 years from now, 5 to 10 years, I see MP Materials being an absolute clear winner in this space moving forward. Another stock that I think is a clear winner for the next 5 to 10 years is STPK, their merger with STEM Inc. Recently on STEM Inc.'s official Twitter page, they came out and said that artificial intelligence-driven commercial energy storage provider, STEM Inc., has put its Athena software platform in a 345 megawatt hour portfolio of California assets in an IT handover that only took 2 months. So they explain in this report, it explains how just recently STEM Inc. had gotten a new energy portfolio, essentially, with California assets in an IT handover. And they were able to integrate this fairly quickly in only 2 months. And the company was appointed to put Athena software to manage the 86-site commercial and industrial energy storage asset portfolio that it was appointed to, that it was handed over by its joint owners. So South Korean technology company SKILZ and Switzerland-headquartered investment fund SUSI Partners in June, handed over this asset to STEM Inc. It was a 345 megawatt hour portfolio of about 86 commercial and industrial energy storage, 86 sites that were commercial sites. Hand that over to MP Materials. And over to STEM Inc. Since STEM Inc. has been there, they've already reduced costs dramatically at these locations, at these 86 commercial sites. And that is what they do. They said that on average, each of these sites have realized about a 30% increase in savings versus the previous installed software that they have. So really, that's what STEM Inc. is doing. They're able to make companies and people more efficient in utilizing energy. And they're able to save companies money by telling them when to use power from the electric grid, when to use power from battery storage, when to use power from solar, and it tells the system when's the best time to use this to optimize, energy output and also optimize your savings. So this is really important. STPK, STEM Inc., my opinion, is absolutely crucial moving forward, especially as we get more electric vehicles. There's going to be more people charging vehicles every night, which means more strain on the electric grid. More strain on the electric grid essentially means that there's going to need to be some way to manage this energy, utilize it more efficiently, and I think STEM Inc. is the company to do that. Their sole focus is their Athena technology and managing energy costs, energy usage, and figuring out the most efficient way for people to use energy. Now on to your favorite stock, actually. Yeah, one where you made a lot of money on, which is Gamestop. A lot of people made a lot of money. A lot of people lost a lot of money. But Roaring Kitty actually just doubled his stake in GameStop, same time as the CEO stepped down. So this was a little while ago, a couple days ago, where GameStop CEO officially announced that he is stepping down. George Sherman, who's been the CEO for the last two or so years for GameStop. After this announcement, a lot of people were excited because what it means is now with Cohen from Chewy being the chairman, now they have really a full suite of technology people and officers. All of the C-level executives have been replaced over the last couple of days, last couple of weeks. They have a new chief growth officer, new chief technology officer, new chief operating officer. Now they're going to have a new CEO. And basically, all of the C-level executives have now been replaced with people who had experience in brick and mortar retail, like George Sherman, now with new people who have experience in technology. Like all of the people who were appointed as C-level executives were either high positions at Amazon, high positions at building the app at Walmart, high positions at Chewy, and that is a really good sign for investors if you're looking at this long term. And Roaring Kitty, who goes by Deep Effing Value on Reddit, he actually exercised 500 call options on GameStop stock at $12 per share, giving him 50,000 additional shares. And a lot of people are liking how this is looking for GameStop long term now, because now the person who's leading the ship, the CEO, is going to be someone who has technology experience rather than brick and mortar experience. It's not like George Sherman was bad for the company. He was able to reduce costs. He got a lot of credit for this internally. The problem is he had over 25 years of experience in brick and mortar retail, and now they need to try and be like a GameStop, an Amazon of gaming. They need to try and transition from a brick and mortar to a solely digital business. And he really just wasn't the right person for the job, and that is what the board thought. So he stepped down, and now they'll be replacing him with someone else. And Roaring Kitty doubled his stake, GameStop, and he said he's not selling anytime soon. He's holding on to it. He says that their proposed turnaround plan is actually a very good plan they have laid out, and with the new people they have on board, it should be pretty successful. Speaking of the CEO, though, George Sherman, a lot of people saw the other day, I did a video on this, where he forfeited $98 million worth of stock. However, I wouldn't feel bad for him at all, because as he stepped down, GameStop CEO also got basically like $179 million goodbye gift. Well, not like exactly they just gave him $179 million, but essentially, most of the time when CEOs get paid, they get like compensation packages and bonuses. A lot of the time, this is tied to performance. So essentially, that $98 million that he forfeited was tied to performance of the company. And since they didn't reach the performance targets, that's why he had to forfeit that money, because it's tied to them reaching performance. If they don't reach the certain targets, then he doesn't get the money. However, this $179 million is actually part of another like compensation, another package that he got, a stock payout that he gets, because this was linked to his tenure, how long he was actually at the company, rather than to his performance, like most companies did. Because during the pandemic, the board of GameStop, they switched up how they were paying him when the stock was really worth was worth very, very small amount. It was, less than $10 a share. They switched up how they were paying him, and they moved it from performance-based to tenure, because performance at that time was really not good at all, especially with everything shutting down all around the world. So right now, according to the report, it explains how he's going to get a stock payout of $179 million. And currently, with this payment, there's really nothing to worry about in terms of him long term. A lot of people were worried, he had to give up $98 million. The stock price has gone up. If the stock price is going up, shouldn't he get paid more? Not really, because even though the stock price is going up doesn't mean the company is doing better. But either way, he is getting a massive goodbye gift of $179 million. And I mean, if I were him, I would have just left. Who cares if he leaves, he steps down, because now he has $179 million, and that's more than CEOs at huge companies get paid in a year. Like CEOs at major companies that are a lot bigger than GameStop don't get paid $179 million in a year. So it's really just because he got a lot of shares, and the shares went from like $5 a share all the way up to $158 a share. They're up to $400 at one point. So that's why it's really so much money. Switching gears a bit, Joe Biden, the other day in one of the stimulus bills, one of the stimulus packages that they're currently working on, he talked about the infrastructure bill in some negotiations with bipartisan lawmakers, as the GOP signals that they would actually be willing to negotiate. They are willing to support a smaller bill. So currently, Joe Biden had proposed a $2 trillion infrastructure bill that focuses on roads, bridges, airports, broadband, housing, and utilities, investing in job training, care for the elderly and disabled. So they had a lot of money going to a lot of different aspects, not only roads, bridges, and broadband, all of that, but also to the electric power grid, also to a lot of money to sustainable energy companies, a lot of money to just a wide range of things. And some people were not happy about this. They're like, an infrastructure bill should only be, this is like a stimulus bill, but this sort of stimulus and relief should, since it's an infrastructure bill, should only be for things considered infrastructure. And some of the aspects of the bill, a lot of people, a lot of Republicans, even some Democrats, did not quite consider to be solely infrastructure. They thought $2 trillion, we don't need to spend $2 trillion. That is so much money after last year where they spent trillions and trillions of dollars. They're like, we need to reel it back a bit, not spend so much money. And now what they're saying is actually that Republicans said they are willing to negotiate and come to the table. A lot of them are saying that between $600 and $800 billion seems like the sweet spot for where they'll probably agree on. And that's going to include just solely infrastructure ideas and proposals in this bill. Senator John Cornyn from Texas, who's a Republican from Texas, said that he would back a roughly $800 billion infrastructure proposal as long as this, as long as this has aspects for transportation and broadband, and the core of it is infrastructure. So really that's the big debate right now. What qualifies as infrastructure? What doesn't qualify as infrastructure? What needs to be in this bill? What doesn't? Because $2 trillion is a lot of money. But the good news is that Republicans say they're willing to negotiate with Joe Biden and Democrats. And either way, if Democrats are able to get all Democrats to vote to pass it, they could still do it either way. They don't need Republican support because they do have control of the Senate, the House, and of the White House and the presidency. So they don't need it, but since it's better if they have some sort of bipartisan agreement. Switching gears, something I found really, really interesting the other day. I came across this story, and that was with Slim Jim. So we saw a couple weeks ago, NFTs were so hot. Everyone was talking about them. Everyone and their grandmother was making an NFT. And now we're seeing Slim Jim launch their own Dogecoin NFT on Doge Day. They launched it on 4/20, and now they're going to be auctioning these off to support charity. And the auction is going to be available until April 24th at 2:59 a.m. Eastern Time. So there's a couple days left for this, and this is... Actually, it seems like it makes no sense. Why are they doing a Dogecoin, basically ETF with Slim Jim? It doesn't make any sense, but it actually does, because according to the company, they said in honor of Doge Day 420, Slim Jim is taking the Doge philosophy of doing only good every day even higher with their first NFT. And they said because of Dogecoin, their Twitter page and their followings on a lot of social media has increased dramatically. They've been posting a lot of memes about Dogecoin, and one of their Twitter pages went from actually, it grew 160%. Twitter followers were up 160% in a matter of 25 days. They saw 35 million organic Twitter impressions simply because of doing Dogecoin memes and incorporating that into their Slim Jim official Twitter page. So that was pretty interesting, I thought, because they said they went from 22,000 followers on Twitter to 100,000. They increased nearly fivefold, and this is all because of them tapping into the Doge community, Dogecoin community. And while it may not seem like a perfect fit, Slim Jim's Dogecoin NFTs, it actually worked perfectly and gained them a lot of traction. And now all of the money that they raise from these NFTs are going to be going to the World Central Kitchen, going to charity. So that is a great sign. They actually said that they will be coming out with some limited edition Doge branded products. It's not going to be like a long-term thing, but they said that they may come out with some sort of limited runs of Dogecoin branded products. And actually, one thing that was really interesting with Slim Jim as well is the first time that Dogecoin was ever mentioned in a publicly traded company's earnings call was with Conagera Brands, which is the parent brand for Slim Jim. So I thought this was pretty interesting, pretty exciting to see that they have also benefited from Dogecoin and that community and tying that into Slim Jim. So we'll see. They said the Slim Jim brand, they don't have plans to expand into cryptocurrency promotion for other brands, but it worked for Slim Jim, and that was something that they had done to really build out their brand. Speaking of Dogecoin, though, I don't know if you saw this, but Dogecoin on Doge Day, it skyrocketed in the morning, and then it tapered off a bit during the day. And at one point, it reached over 40 cents per coin. And some people are saying that now the rally is over after that hashtag-fueled rally with everyone tweeting out Doge Day, Doge 420, Dogecoin, everything on 420. There were millions of people tweeting about Doge Day, Dogecoin, everything like that. So some people are saying that rally is over, but I don't think that's the case at all, because you got to remember that Dogecoin is a meme-based cryptocurrency. It's all about attention, hype, people talking about it. If there were millions of tweets about Dogecoin, Doge Day 420, Dogecoin 420, all these different hashtags that were used to fuel this rally, this is not going away anytime soon, because now there's that many more millions of tweets and then, millions of retweets. That's getting so many more people knowledge, that's getting so many more people aware of Dogecoin, making more people interested in it, making more people wanting to join the movement, join it and invest in it. And I think that all of these, while we did see a bit of a drop off after Doge Day, I think that this is just the beginning, because whenever you see a massive run up, whether that was with Gamestop, AMC, anything that has a lot of hype, right at the beginning, you see a massive run up and then it always starts to taper off. That's how a lot of these things work, but I don't think it's at the end of its rally yet. I think we will see it hit the $1 per coin range. All you need to have is Elon Musk come out and tweet about it a couple more times, which he definitely will. He's already tweeted about it, liked a couple of tweets over the last couple of days to do with Dogecoin. All we need is one or two more major announcements, major tweets from some big names that could really drive the price up even higher. So while, you shouldn't invest your life savings into this, in my opinion, this is still something that could go up significantly. You could lose all your money too, but either way, this is something that I don't think is slowing down anytime soon. And while some people are saying that the rally is losing its steam, people are, getting out of it, I don't think so at all. If you look at it over the last couple of weeks, it's up 400%. How is that slowing down? Yes, it did reach over 40 cents per coin, almost 50 cents per coin. Now it's come down a little bit since then, but that is just natural. It can't go, it seems like it could go up forever and ever and never, and never stop, but it has to consolidate at some point. This was a point where it has consolidated around, and now I think it's time, once we just need a couple more catalysts, and I think it's going to really start to take off. Speaking of stocks that have been taking off, though, stocks that I really like as well, Palantir. They just extended their digital transformation partnership with Ringier, and this is a really, really big deal because Ringier is an innovative, digitalized, and diversified Swiss media company operating in a bunch of different countries. They operate in a bunch of countries and continents. They operate in Europe, Asia, and Africa. Their portfolio includes about 125 subsidiaries in the print, digital media, radio, ticketing, entertainment, e-commerce space, and many more spaces. They are really a very well-diversified business. They've been around for over 150 years. They're coming close to 200 years now. They were founded in 1833, and right now, 72% of their revenue comes from digital. So this partnership with Palantir and Ringier is really an ideal fit. They just expanded their partnership from what they already had. But what Ringier does is they use Palantir's Foundry software, which is really the software geared towards commercial businesses. And they use the software to harness the power of data in order to better serve and inform readers. And they said by expanding reach and enhancing relationship to its audience. So basically, they're going to use Palantir's system to better reach their audience that they want to reach, better analyze the data that they get from their millions of people who view their platform every single month. And from all of this, they said they'll be able to better make data-driven decisions. And we know now that data is the most important thing for any company. And with Palantir being at the center of this, they're already starting to expand government contracts. That makes up a huge portion of their business. But now with this expanded partnership with Ringier, expanded partnerships with AWS, IBM, they're really starting to grow their commercial side of their business as well. And that's been something that a lot of investors who are bearish on the company or who are a little more skeptical have been worried about. A lot of people are saying, well, Palantir, most of the revenue comes from government contracts. They need to get some more commercial contracts. Well, here's a commercial contract that is a really big deal because it's with a company that's been around for almost 200 years. It's a major company that's in Europe, Asia, and Africa. And not only this, but Palantir also, I don't know if you've seen this, but Palantir, they're expecting their revenue and profits to spike dramatically. According to their recent reports, the company projects that they're going to be having about $4 billion or more of revenue by 2025. And based on this projection, that means they're going to grow 35% year over year in terms of their revenue for the next 3 to 5 years. That's a massive growth rate. So I don't know, people are saying government contracts are not a good thing. I don't see anything wrong with government contracts. Government contracts add a lot of trust. They make, at least me, if I see a company has a bunch of government contracts, makes you really trust them and when they're handling your data. Another thing is that Palantir really only works with the US and their allies. They don't work with adversaries. That's another thing that you can trust them even more. Another aspect of Palantir is that their government contracts keep getting expanded. In my mind, a customer is a customer. If it's a government contract, if it's commercial, I think government is even better because once you get those locked in, government's not going to want to switch away from you because they're going to trust you with their data. But I think governments are even better, and their commercial business is growing very rapidly, and I think it's already starting to come in time. Lastly, is they have already started to change their business model. Their business model has changed from being like a solely from paying their contracts where you had to pay a lot of money up front, long-term agreements. Now they're doing more of a recurring revenue basis where people are on some sort of subscription and they could pay smaller amounts periodically. So I really like Palantir. I think there's a lot of upside. I think this could be one of the biggest data analytics companies out there. And a lot of people are saying that it does have potential to reach that $100, $120 per share range very, very soon. Now, I don't know if you saw this. You told me about this actually, I think yesterday. Yeah. So Venmo, they actually just added support for users to buy, store, and sell cryptocurrencies. Not all of them, but they did roll out this feature to a number of users that allows the option to store, buy, and sell popular cryptocurrencies like Bitcoin, Ethereum, Bitcoin Cash, and Litecoin. So it doesn't include Dogecoin, which a lot of people would want to see added. And if it does get added, that would be huge. But this is a really big deal for cryptocurrencies in general and a really big deal for PayPal and Venmo. Because Venmo right now, they have over, I believe, 70 million users as of Q4 2020. And this is a really, really big deal because 70 million people use the platform, and now they have access to easily buy, sell, hold, store cryptocurrencies. This is really important because if you look at, let's say, Robinhood has significantly less users than Venmo, significantly less. It has about, 1/5 the number of users as Venmo, and now Venmo is getting into this space. Another thing that could really help cryptocurrencies in general is that they said with this new announcement from Venmo is that Venmo is like a social media based platform. You get to see, what people are buying, what people are paying for. That's how the platform works. You have that homepage where you can see what all your friends are currently doing. That would be the same thing with the cryptocurrencies. If people are buying, selling, holding, it would work the same exact way. People are going to see that on the platform, and that could encourage people's friends, people they know, to buy it themselves as well. So they said that this will be rolling out to some users today, and that all of the users will have access to this by the end of May of 2021. This is very exciting for cryptocurrency, huge for cryptocurrency. Another 70 million people will have access, easy, instant access to buying and selling and holding crypto. And also it'll engage people and their friends to do the same thing. So this is something I'm very, very excited about. And let me know if you guys already have access to this, because some people do already have access to this. Now let's talk about AMC. So AMC has, been a little bit of a roller coaster lately. We saw Wanda Entertainment, they sold about $220 million worth of stock. We saw the CEO come out, and he said that they will not be selling a single share. They will not be issuing a single share if authorized to issue 500 million shares. He said they will not issue one single share of those this year in 2021. They may do it in 2022, but he said if they are authorized, nothing would happen in 2021 in terms of issuing new shares. So people like that. People weren't happy about Wanda Entertainment, but now analysts are saying that AMC still looks severely undervalued from where it is right now. They're saying this thing has a lot of upside, and we're at a key inflection point for the stock to, change trajectories, take a massive, ride upwards just because of what's going on with vaccines being rolled out, with movie theaters starting to get more and more numbers in terms of people attending, and things are looking much better. We already saw Godzilla vs. Kong at a record-breaking weekend in terms of the last year or so for movie theaters. This movie did much better than expected, and AMC is capitalizing on this. AMC is one of the largest, movie theaters in the US, and right now, in terms of their numbers, while, they are priced at a bit of a premium from where they're currently at, I think with the whole entire community they've built with this massive short squeeze, people are, all in or nothing on AMC stock, combined with the fact that we're seeing vaccines being rolled out, theaters opening up in New York, Los Angeles, more and more, capacity is increasing for all these places as well. Movie production studios are saying that they're still going to be releasing movies in movie theaters first in coming years. I think all of this is lining up for AMC to really have a lot more potential, and analysts are projecting that it could reach about $15 per share. That's the average price target on it from these analysts. So this will be really exciting to see. One thing that I like about AMC is that is with Warner Bros. Warner Bros. Came out and they said that they're going to be releasing new movies in movie theaters first. They're not going to go to just streaming, and that's been a concern of a lot of people. If production companies are going to release movies on streaming first, well, that would hurt movie theaters. But they said for major titles, that won't be the case at all. So very bullish on AMC. I think this has a lot of potential, and I think, these analysts, they gave it a $15 price target. That is pretty exciting. Now let's talk about ARK Invest and Cathie Wood, because they did something very surprising the other day. They bought a stock and sold all of it within the span of a week. ARK Invest and Cathie Wood, they sold 590,000 shares of Virgin Galactic just a week after buying 514,000 shares. So within the span of a week, they sold more. They sold basically everything they just bought in 1 week. And that is a little concerning, because right now we've seen Chamath, billionaire investor, he sold his entire position in Virgin Galactic. He sold everything. He said it was just he needed funding for something else. Now we're seeing Cathie Wood selling a lot of her position as well. And this is just a little concerning, because Virgin Galactic is a company that is really betting on the future of basically space travel. And one thing to keep in mind is that this company, I guess ARK Invest, no big news has come out on it, but all we know is that their timeline has been continually delayed from when they first projected they would have the first flights rolling out. So this is something just to keep in mind, that ARK Invest is selling a lot. And Virgin Galactic was the 19th largest holding in ARK's new space exploration ETF, but after they sold it, it's down to 33, and that's just not a good sign. I don't know personally everything going on behind the scenes at the company. No one does. But all we do know is that timelines keep getting pushed back, and Chamath sold his entire position. Cathie Wood, she sold now a lot of her position, and this is just not a good sign for a company that is really betting long term, and they aren't going to be generating any revenues, at least for the next couple of years. So if you're this would be a high risk, high reward stock, but it's really betting on the future because we know they're not going to have any revenues for the next couple of years. Switching gears, let's go on and talk about Nio. So Chinese Tesla rival Nio officially says that it is going to be targeting Europe, going into Europe very, very soon with its first electric vehicles to leave the country and go overseas. So this is a huge deal because we've already seen XPeng, one of their major competitors. They delivered vehicles to, I believe, Norway. They delivered about 100 vehicles to Norway earlier in 2020. They delivered 100 of them just to get into the market a bit. But Nio had not done anything overseas yet. And now they're saying they're taking their first step to going global, as they will be sending vehicles to Europe. They're not building a production facility in Europe yet. They're not doing any of that. They're just going to start, exporting vehicles to Europe. They said they want to be part of the business community in Europe. And they said selling some of their vehicles to make some money is not their ultimate goal. They want to be integrated into the culture, integrated as one of the premier brands in European society. So they said at the Shanghai Auto Show that they will be laying out a detailed plan sometime in early May. And this is great news because, this is a really big move for Nio. They already have dominance, they're really a dominant number 2 player in the Chinese EV market. They're well behind Tesla, but they're really starting to separate themselves from all the other EV companies out there. And this is something that's really going to help them be a major player for years to come, because they're not just in Europe, they're not just in China anymore. Now they're starting to take eyes overseas. We'll probably see them come to the US at some point as well. But it'll be interesting to see how they're able to transition overseas. One thing to keep in mind is, while I love Nio because they have their battery swapping stations, if they're going to move to overseas, into Europe, into the US, we're going to have to see them start building battery swapping stations there as well. They don't have to, because people can just charge the vehicle. That's one of the key value propositions of the company. So it'll be interesting to see if they build battery swapping stations in Europe off the bat, if they're going to wait to see people actually buying vehicles. It'll be interesting to see how that happens. But I think personally, if Nio does successfully expand overseas, they're going to have to put their battery swapping stations, because in my mind, that's something that really is a value proposition for the company, something that really separates them from their competitors, these battery swapping stations. And speaking of Nio, despite the chip shortage that all automakers have seen, especially electric vehicle companies, Nio says, according to analysts and according to the company, that deliveries could still double this year. So according to an analyst, Mizuho analyst VJ, he said he's very optimistic about the stock with a $60 price target, and most analysts have around a $60 price target right now as well. So for Nio, the analyst explained how Nio's deliveries grew more than 5-fold year over year in March to 20,100 vehicles delivered in Q1 of 2021. So he says that this is far faster than the global car industry's production growth of 16%, or the 77% increase we saw in China. So China's, EV sales were 77% increase year over year, and Nio's was a 5x, five-folded their entire thing, their entire delivery numbers. But this analyst, he goes on to explain how he is very, very bullish on Nio because of a couple different reasons. First of all is their battery swapping stations. He says, essentially, this separates Nio from all of their competitors, and it's really a great value proposition because when an EV's battery is depleted and it needs to be charged, people can just go to a battery swapping station. In less than 3 minutes, they can have a fully replace their battery that's basically run out of battery, replace it in 3 minutes with a fully charged, restocked new battery. And this is something that he really likes about the company. So either way, right now, even though Nio has seen a chip shortage, just like all the other companies out there, they're still able to continue delivering on their numbers. We saw Q1 of 2020. They had great numbers like for January, February, and March in terms of deliveries, record-breaking numbers for the company, and I don't see them slowing down anytime soon. Once we see the semiconductor shortage, get solved and figured out, I think that's going to be a huge thing for Nio, because then they'll really be able to start ramping up production even more than they already have. And I don't know if you've seen this, but this one guy, he just became a Dogecoin millionaire using nothing but his stimulus checks. And you may be thinking, how is that possible? Stimulus check was $1,200. If he invested a stimulus check at the lowest point in Dogecoin, it would be up 165x. So according to this article, it explains how what this guy did is, after studying the market, he said he sold all of his stocks, he took all of his savings, he put everything he had into Dogecoin, including his stimulus check. It was right around the time he received his stimulus check. And this is a middle-class man who received a stimulus check from the government, and instead of spending it on food, rent, and typical things like everyone else, he used any money he could bring together, put it into Dogecoin. And he says, right now, he has over $1 million. They didn't specify the exact amount, but he says he's not selling out of Dogecoin anytime soon because he doesn't want to pay the short-term capital gains. And you just have to be really careful with this. This is something that I talked about in a different video the other day of another Dogecoin millionaire. You just have to be careful with this, because everyone thinks, Dogecoin is going to stay at the price it is right now forever, or it's going to go higher. But you just never know. And $1 million, $2 million is a life-changing amount of money. Even if you have to pay higher taxes, it's still a life-changing amount of money. And I just wouldn't want to see someone lose that. At least sell part of it. Because if you go from being someone who has, $5,000, now you have $2 million, well, that's life-changing. And you don't want to miss out on that, even if you have to pay 50% taxes. Who cares? You could live the rest of your life off of the money you made. And I think rather than be greedy and, try and make more or try and pay less in taxes, at some point you just need to say, look, I shouldn't be risking my life savings on this, because Dogecoin, while it can go up, it can double or triple or, go up significantly more from where it is, and you may regret it. The bottom line is that, would you be happier? Like, would it change your life if you sold it now and you had $2 million, let's say, or would you be upset if you waited and it went back down to $100,000? Would you be upset? Because that is very possible with Dogecoin. You shouldn't invest any money that if you lose the money, it shouldn't be something that you're worried about losing. It should be something that you're just having fun with, you're playing around with, and you're just investing for fun. Obviously, as people have been making more and more, it's becoming to be a pretty significant investment. But if it was me, I would just say, make sure you don't keep your entire life savings in it. He took a risk by doing it. It paid off, but it's like now he has life-changing amounts of money. And I'm not trying to be negative. I'm just trying to be realistic. He could live the rest of his life off of like dividends, 7% dividend. So it's just something I would consider. But let me know what you guys think about that. So anyways, that's all I really got for you guys in today's episode. I hope you enjoyed it. If you did, please be sure to like the video down below. Also, don't forget, you can get 4 free stocks, each valued up to $1,600 when you download the Wrubel investing app using the link down below. Hope you enjoyed, and I'll see you guys in the next episode.